March 27th, 2025. The day started out with a breakout attempt below the prior day's low. Obviously, after a bear trend day, 75% chance of 2 hours of sideways to up trading, 25% chance of a big follow through bear trend day, and 50% chance of some sort of sell off on the open lasting at least a couple of bars. 1 and 2, you could argue. Obviously, you could argue 1 and 2 need a second leg, but you're trading before bar 7 if you're selling the close of bar 2. That's a risky thing to do. And if you're selling down here, you're selling the bottom of the bear channel line. Really not all that ideal. So probably better to wait and see if we get a failed breakout below the channel, because if you get a failed breakout below a channel, odds are you try to test the other side of the channel. And if this is the low of the channel, this is the high of the channel, you could argue we had a channel line break, a retest, and we might have to rally back up again. Or you could argue that this is we should just test at least the channel line. Either way, 3, a credible reversal and a possible low of the day. 4, a big follow through bar. Odds are we're going higher, 3 and 4. 5, you could buy the close of 5. It's not unreasonable. Again, odds are we're going to get a second leg up at this point. I personally did not buy the close of 5 simply because I prefer to wait until we have I prefer to wait until after bar 7 to take any trades. Bar 6, so we have 4 straight bull bars, 3, 4, 5, and 6. Odds are we get at least some sort of small second leg up. 7, disappointing, a large tail on the top, probably buyers below, somewhere scaling in lower. You know that if you're buying the close of 7, you're probably a trader who's willing to scale in. So you have to keep in mind, if you're buying this close, even if we start to get a deep pullback that looks scary, 3 through 7 is going to get another leg up. So you can buy the close with borderline impunity, expecting that you can scale in pretty heavily. But you'd have to have a wide stop somewhere down here is the issue, right? You can't have a stop below 3, because a stop below 3, it means that, if this gets run, odds are there's probably buyers below 3. So you probably have to have a stop even wider somewhere down here. And you probably are saying, well, I don't want to risk that much. Right. That's why it's a trade that a lot of traders are not going to take. But it's important to understand that a bank that can scale in 40 times wants to scale in 40 times, right? Because, if you're a bank and you have, I don't know, $500 billion, you can't just put $500 billion into the stock market and pull it out. That's not how that works. So those kinds of traders are hoping that it goes down and they can scale in 40, 50, 60 times with their algorithm and then make money on the way back up. 9, an outside bar. I'm probably going to pull back a little bit because it's an outside bar, which is mostly a trading range bar. So while we might go at least a little bit higher, I'm not sure how much higher we're going to go. 10, consecutive bull bars, 9, 10. 2 legs up, 1, pullback 2. So odds are, I think after 1 or 3 through 7, I think it's likely that we get 3 legs up, but I'm not sure how much more than that we will get. 12, 13, 14 is a 3-bar micro channel, and it's a decent looking one, although we don't have an open micro gap, right? The strongest trade in the 3-bar micro channel, in my opinion, is a micro gap in leg 1. So here we have a micro gap in leg 1. We have a micro gap in leg 1 here as well. So that's the trade that has the highest probability of getting a second leg. Doesn't always mean it goes straight up, right? You can see here we got a deep pullback first, but if you find a leg 1 trade that has an open micro gap, odds are you're probably going to make money if you buy the close or sell the close and are willing to scale in. This is leg 3. So if you're buying up here, the bulls have mostly accomplished their objective, getting above the bar 77 high, the breakout point. You can see we tested back to it on bar 17. An outside up bar, 17 consecutive outside bars. You can argue about final flags or whatever you want to call it, but really we have 4 legs up, so odds are we get 2 legs sideways to down. 20, a bear bar. It's good enough that 20 should get a second leg, especially after 1, 2, 3, 4 legs up. So not necessarily endorsing selling the close of 20 and scaling in. You can do it. It's just a bit of a difficult. It can be a difficult trade to manage. I personally am not good enough at trading to take that sort of trade. But if you can, and you did well doing it, then all the power to you. Bar 21, 22 looks like, again, you can start arguing 3, 4, 5, 6, leg 11. When you start getting into over here, you're saying, oh, it's leg 7, leg 8, you're in a trend, right? So that's something to keep in mind. But it's probably like 4 or 5 up here, and then we get a reversal down, 24. Odds are 23, 24, we're going to get another leg down. You could sell the close of 24. It's an always in flip, in my opinion. I think most bulls have to exit below 24, and 25 confirms that we should get at least 2 legs sideways down. I did not sell the close of 25. The reason was the 15-minute chart. We had such a strong rally on the open that I thought it was going to get a second leg, and I was hesitating. Now, once we got these consecutive bear bars, I thought odds were we got at least one more leg sideways to down, and then we got a second leg up from the earlier rally. But I was very hesitant to sell in the moment because of how large the rally was, and the 15-minute chart was such a strong rally that I was kind of just staring. I got caught kind of staring at the trade, and did not end up getting in. Had I sold, you can see we got one leg down, two legs down. I probably would have gotten out on the close of 32. Odds are 31, 32. A breakout and follow through, you should get a second leg up. This is really the basis of Ali's whole white paper. I'm not going to pretend I understand the whole thing. Probably barely understand half of it, but it's pretty clear to me that, if you have Ali's white paper and you look at, I think it's figure 12, breakout and follow through, it should get a second leg. He has the percentages in there, the odds that it gets a second leg. So for me, I see a breakout and follow through. I know there's a pretty good chance we're going to get a second leg. Now we have an outside bar to start it, which is a trading range bar, so it's not quite as good as it could be, but I'm still expecting a second leg up from this. Now, there are traders who know that this is a really tight channel down. On a 15-minute chart, that's these two bars. That's where we were. So those two breakout bars on the 15-minute chart are going to get a second leg down. And 31 and 32 should get a second leg up, but this is the 5-minute chart. So while we should go a little bit higher, ultimately you have to keep in mind this is pretty strong, and unless we get a strong breakout up, odds are we're going to get back into this area. 35, 36, breakout and follow through, probably should get a second leg down, a reasonably tight channel up, so maybe a little bit of a difficult trade, but I still think it'll get another leg down. My first trade of the day, not that great. I sold the close of 42 and I was willing to scale in, but it's leg two. I knew, the problems I wrote down with the trade was that I was selling on the channel line in leg two in a trading range. So a lot of times in trading ranges, you only get two legs, and micro gaps can be climactic in trading ranges. So I really didn't love the trade. Initially, I was willing to scale in, but if I got an opposite signal, I was ready to reverse. So I sold small and I was going to scale in, and then I got 45, a micro gap. I was pretty convinced it was leg one. I bought the close of 45, so I reversed, and then I added more at 75% pullback. The issue, obviously, was that I had a 6-bar micro channel against me for the bears. 1, 2, 3, 4, 5, 6. So we had 6 bars without trading above another bar. For me, if I'm buying in leg one, I get 6 bars without trading above another bar. I'm very convinced we're in a trading range at the very least. So you should be cautious when you're getting 3, 4, 5, 6 bar micro channel against you when you're trading the 3-bar micro channel system, because that can lead to large losses. So I bought the close. I bought more here, and I used 52 to get out at break even. Initially, my goal was to get back out at the 45 close, so buy more and try to get out up here. But 49 gave me a chance to get out at my actual break even price, and I did not take it because I thought if 49 closed on its high, odds were we would test here. It said it did not, and so after 50 and 51, 6-bar micro channel, I know there's going to be a second leg down. This is 6 straight bars without trading above another bar. So as strong as this is, I know we're probably going to get another leg down. So I used the rally on 52 to just get out at break even. Then we get a big outside down bar, 53. You could argue it's 3 to 4 legs down. I would not sell 54. It's a late leg, however you slice it. 1, 2, 3, 1, 2, 3, 4. However you want to call it, it's not leg one. So I would stay out. So I took a small loss on this trade. This saw the close and the exit. I took a small loss. Then this trade, I broke even. And then I bought the close of 56. It's leg two, right? In my opinion, it was leg two. I think this is leg one, and then we get a deep pullback. So I think this is leg two. So we should get at least one more leg up. My initial target was the bar 23 low. The reason I used the bar 23 low is because it's a breakout point, right? So the bull's buying up in this area and willing to scale in. This is where obviously, like I'm talking about, like a bank on a 15-minute chart, buying, expecting that there should be buyers below 23, and they get trapped and they'll scale in all the way down, knowing that this is really strong and that we're going to get back to this area. Obviously, you don't want to do that as someone who doesn't have $500 billion. It's probably a lot better to just exit the trade and look to buy somewhere lower. But my initial target was the 23 low. So I bought the close of 57. I bought the close of 56. I bought more, I believe, on the close of 58. Reversal, follow through 59 or 58, 59. Should get some sort of second leg down, but the tail on 61 could be considered the second leg down. So I was willing to hold. I wanted to at least get to the bar. If we got to the 35 high, I probably would have just taken it because sometimes it'll get to the magnet right before the magnet, if that makes any sense. But again, it's a trading range. So a lot of times trading ranges try to trap traders out. So I ended up holding 61, 62, 63, 64. Once we got 63, I thought it might be a failed breakout, and we have three legs, 1, 2, 3. So I wanted 64 to be a good looking bull bar if I was going to stay in the trade, which I got. I wasn't thrilled about it being an inside bar. I wanted it because it's not a breakout bar if it's an inside bar, right? So I wanted it to be a breakout bar. I wanted it to close somewhere up here. Instead, it's an inside bar with disappointment on 65. If I had bought this close, I would exit on the close of 65 around break even. So for my earlier buys, it's the same thing. I exited on the close of 64 or 65 around break even. And then we got 66 disappointing. And we do end up going up to the magnet, as I mentioned, but sometimes in trading ranges, the market is going to do something to trap you out before it goes to the magnet. And I am not willing to hold through 66. I could have bought again on 69, but I was fine with the day. I ended up with a very, very small profit on the day. As far as trades, if you're an opening reversal person, there you go, right? Bar 3, failed breakout below the bottom of a channel and a reversal up. I remember a day like this, maybe a year and a half ago, where it's basically the exact same thing. A bear channel headed into the end of the day and then a failed breakout below the next morning. So if you're one of those people who, you want the opening swing trade and that's it, you're going to lose a lot of trades, but the trade you take, like bar 3, is going to make you back all your money and then some. You can buy the close 4, 5, 6, 7. You can pretty much buy the close all the way up. If you were, once you get to 14, 15, it is a late leg, so it's a little bit difficult. You probably have to exit below 20 or 24 at the latest. You could sell the close 25. That's probably a pretty strong trade. You get follow through. You know that the downside is probably limited because of how strong the 15-minute chart is, but the bears need a second leg on the 15-minute chart as well. 1 second. I am expecting another leg up after 31 and 32, but I would not, I don't personally take this type of trade. I trade the 3-bar micro channel, as I mentioned. But I have a friend who's a very, very good trader who is profitable, makes very good amount of money trading, who he just loves the breakout and follow through, and that's all he takes all day. And he does really well. Very smart person. 42, 39, 40, 41, 42. It's a late leg, right? So it's not really that great. And it looks like it obviously ends up starting to fail as we pull back above the channel line. And I think 43, 44, 45, if you're selling down here, you're hoping it's a bear trend, even though it probably isn't. And if you're buying this close, odds are you can scale in and make money because this should be leg 1. Again, if I listened to myself more often, I would probably mainly stick to trading leg 1 trades with a micro gap because those are going to have the highest probability of success on any given day. They don't occur as often as you'd like. There's probably 1 to 2 a day, but they're really good trades whenever they happen, especially trades with micro gaps. If you read the white paper, increase the odds of success. And then 57. Sorry, so you could buy and scale in. I would not sell on the way down. It's risky. It's hard to buy, but you can't really sell. So you could buy the close of 55, really good close, breakout and follow, or reversal and follow through, should get another leg up. You could buy any of these closes, reversal and follow through 59.60, but bad against this. And we have 2 legs up. We should get another one. I thought this was leg 3, so that's why I got out. I'm not surprised that we got up here, but that would be why I got out. On the daily chart, so kind of disappointing follow through. If I sold this close, this is a little bit disappointing, but we should still get a second leg down. Wouldn't be surprised if we traded below today's low yesterday. I still think even if we get another leg up, we go lower. Oh, that's the monthly. That's the monthly again. Give me a second to okay. Simply because looking at this, odds are that this gets another leg down. So even if we get a pullback, relatively deep one, I think we're going back to 5,500. And we'll probably form a trading range between 5,500 and 6,200, something like that. As I mentioned, I did not think this would be the start of a bear trend because it's a big doji bar. So it looks like it probably is not, but I still think the bears need a second leg sideways to down. So for me, what could have I done better today? I could have sold the close of 25. And I need to get better at just learning when to scale everything, right? My whole, the whole study that I'm running on 3-bar micro channels, I'm restarting again just because, I'm not doing a lot of the stuff the correct way, and still a lot to learn on all that. But, just learning what to expect in every situation in your one particular setup is a lot easier than taking 10 years to learn what to expect in every situation, in every setup. So, yeah. All right. That's basically going to be it for this video.